Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 21st of March. Starting off with the FTSE 100, where if you could survive the 100-point overshoot to the downside towards 7,200 that we had on early Monday, everything went according to plan. So it was a bear trap below the December support area 7,300, bouncing off the RSI 30 area twice, or actually below the RSI 30 area, which is historically been where this market's found support. You can look back and see that normally RSI 30 is the dip to buy into. We had that dozens of times, I think, in the recent past. The other thing we were looking at was that October rising trend channel, or trend line rather. That's running around 7,400, and the 200-day moving average around 7,430. Above that, on an end-of-day close basis, we're looking towards the 50-day moving average, actually probably initially the old support there from January around 7720, and then the 50-day line at around 7,800. If you're looking for a further fresh cue for an upside indication, it would be an end-of-day close back above yesterday's, rather Friday's resistance at 75.10. So above 75.10 on an end-of-day close, we're looking towards 7,700, maybe up to 7,800 as a recovery after what has been quite a vicious bear trap below 7,300 to date. Otherwise, below 7,300, obviously 7,200, and then the risk of 70.80 or so as a worst case scenario. That was the initial October resistance zone. Moving on to the DAX, which compared to the FTSE, rather less hairy, which is rather unusual. Here we maintained our trajectory within a rising October or September trend channel. The floor of that channel there around 14,700. Above that, we've been looking for the 50-day moving average at 15,200, gapped up today, which is a very strong signal. And that suggests that we should get our end-of-day close above the 50-day line, 15,300, and then perhaps over the next week or so retest March resistance around 15,600. If that happened, it would be quite a coup for the bulls, because obviously that's been quite a shakeout over the last couple of weeks with the Credit Suisse debacle. On to the Dow, and here the weakest of the three where it was, but actually looking pretty decent now. We've had a nice bounce off that October uptrend line, doing better than the FTSE really, and that's based around 31,800. Above that, we're looking for an end-of-day close above the 200-day moving average at 32,400 to take us back to the 50-day line at 33,300 at the moment. Rather obscure falling RSI support line rebound, but it was at the RSI 30 area, and as you can see, once again, anything at RSI 30 or below has been a decent buying opportunity or situation for this market, and indeed the indices as a whole. Moving on to Bitcoin, which managed to fly above the clouds in terms of the recent turmoil. In fact, making progress, surprising progress. We've got the 50 and 200-day moving averages both rising. We've got another bull flag in this situation over the last few sessions, and while we're above the old initial March resistance there at 26,400, looking for 32,000 at the June resistance line projection, perhaps as soon as the end of next month, and maybe with a fair wind by the end of this month. So everything here really on 26,500, only back below 25,000, and post-August resistance really delaying the upside scenario. Moving on to the stocks, and first is Clontarf, which looks as though it's consolidated well, even though it's come back from 0.2 pence to 0.13. Support coming in above the 50-day moving average. That's rising there just below 0.12. And above that, looking for a retest of the 0.2 area. Best case scenario, maybe by the end of next month, if we're lucky, would be up to 0.23 at the top of that rising trend channel from the September of last year. RSI pushing through the neutral 50 level as well is also a plus. If you're cautious, you wait for an end-of-day close through that 0.16 resistance on the way down. Stock which is started to catch up with the fundamentals is Dekel. Here we've got a falling wedge that we've had in place since May last year. great bullish divergence over the course of March, and that seems to have kicked in. The neckline resistance there around 2.1 pence, and above that looking for 3 pence by the end of next month, perhaps a bit more. You'll also see that we managed to break back above the old July support there at 2.1 pence, and that means that we've had a sort of double bear trap rebound for the shares, which is probably quite deserved after all the sell-off that we've had over the past year. On to Caracal, and here hopes that the shares would return to the 0.4 area have proved to be correct. We managed to break through the 50-day moving average yesterday, and we should get up to 0.46 at the top of that January broadening triangle, while we're above the 50-day moving average at 0.33 on Caracal. Nice move today from MGC Pharma on the news, up nearly a third, and gapped up as well. Bear trap gap reversal above the 50-day moving average at 0.53. We're looking for as high as 0.8 by the end of next month. And really at this stage only back below the floor of the gap there around 0.46, or resistance on the way down, in fact, would really delay the turnaround scenario, especially with that bullish divergence line that we have there from January in the RSI window. Moving on to the situation with a stock which has been in the news over the last few weeks is Powerhouse Energy. Here you can see that we are up 5% today, just basically underpinning the idea that support comes in for the shares just below the 1 pence area. While that uptrend line from October holds, we're looking for a zigzag back towards at least 1.3 pence and that September resistance line projection. Going back alphabetically, because I missed it out, is Manx Financial, and here we've got a rising trend channel from May last year. Gap higher today on the news that we've had, and looking towards the 35-36 pence zone at that May resistance line projection to be hit maybe over the next 2 to 4 weeks at the current rate of progress. Moving on to Synergia, which is a stock which is trying to revamp itself. We've had a gap close rebound here, bouncing or breaking through the rising 50-day moving average at 0.1 pence. Above the 50-day line, looking for at least 0.12 at the 200-day moving average, and maybe over the next 1 to 2 months back up to the 0.2 pence area. But nice turnaround there for the shares over the start of this week. Onto a stock which has been rather difficult to chart over the recent past, but just the first signs that we actually will have a lasting turnaround here. The shares keep on going down for another leg, but have got bullish divergence there, so that does suggest that the 20 pence zone should hopefully be the low for the shares, and we could head back towards the top of that falling trend channel as high as 35 pence over the next couple of months. Initial target here really back up to the 25 pence area, 26 pence area, which was resistance on the way down earlier this month. So above 20, looking for 26, and then perhaps 34 as a best case scenario. Moving along to a stock which a lot of people seem to be calling into a recovery situation. Here we've got a line of resistance really from back in February. Shares will try to poke through it, but depending exactly where you draw the line, we'd probably say that we really need to see an end of day close through 5 pence for Versarien, and basically if we can get through 5 pence, then the next level up would be up to 6.6 pence at the 50-day moving average. You note that we haven't been above the 50-day line since the beginning of December, so looking quite pressured even at this point. Couple of stocks to finish off with. First one is Verici or Verici. Here we're up over a third with a bullish divergence and a bounce off that support line there from back in June. That was around the 5 pence area, and above that looking for the 50-day moving average at 9 pence, maybe over the next 2 to 3 weeks. Last one of the day is Woodbois, where we've hopefully hit the bottom, a bit like Saita. Here you can see there's a bullish divergence line that's there from December. Recent support, or the latest support, around 1.15 pence. A break of the 1.25 pence level should be enough to get us back up to 1.5 pence. So if you're cautious, you wait for an end of day close above 1.25. Otherwise, you'd assume that the bouncing off this bullish divergence line should turn the shares around from current levels, at least while we're above 1.1 pence on a mid-price basis. Best case scenario here would be up to the top of that broadening triangle from the beginning of the year, 1.75. But let's go for maybe the 50-day line first on that situation. That's it from me today. More updates tomorrow.